get into it straight away. What is my #1 tip if you want to be successful using RENKO charts? Well, let's have a drum roll. Always build in volatility to the brick size calculation. So let's take a quick look at the normal standard ways of calculating brick sizes, and then I'll show you a way that I use to come up with the brick size that I've found very useful, very profitable over the years. Now, every asset, every market you trade is different. They all have different price behaviors and actions, whether that's commodities, cryptocurrencies, stocks, forex, all very different. So it's massively important when you're using RENKO to get the right brick size relative to the asset you are trading. And there are three traditional ways of setting your brick size: a fixed value, percentage of price move, and average true range. Now, the common assumption is that the brick size we're using should be the same, constant across all asset types. Well, this might not be appropriate for many reasons. You know, if it's too large, the brick size, you're not going to get any signals at all. Too small, and you're going to get too many whipsaws, too many false signals in there. And both of those approaches are very dangerous to, you know, the long-term success of your trading. And let's have a quick look at two different approaches to just show you how, you know, you can create different block patterns and pictures very easily that can lead you into different types of answer. So we're looking at WTI crude oil here, and on the left we've just got a fixed $2 brick size approach, and on the right we've got something using ATR divided by 4 approach. But the quick takeaway from this chart is, you know, it's the same market, but we've used two different methodologies, and you can see the one on the left, you know, less bricks, the one on the right, more bricks. So what is right, what is wrong? Very hard to tell. Now, our first methodology is using a fixed brick size. That just means you've created a number for the brick size based on maybe your own experience, knowledge of the market. Now, if you kept that fixed, that has two issues. The first one is that, you know, over time the asset that you're looking at either gets more expensive, more volatile in price action, and what you're using there as that fixed size is no longer relevant. And also, as we saw in those examples, if you use the fixed size that you use, is it actually appropriate to that instrument for your strategy? Is it going to be too big, too small, make you no trades, or too many trades? And that is the problem with the fixed value approach. Unless you are regularly adjusting it to the asset, then it's not going to be that great a methodology. And as I've mentioned or hinted there, we're missing one key factor. Now, the second approach is to use a fixed percentage move. It's another discretionary approach, and it's going to have the same sort of problems as the fixed value. You know, is your 1% move appropriate for a stock versus a crypto versus an FX pair, you know, versus a commodity? You know, these are crucial questions that you need to be asking, and again, it's missing that one key factor that we now need to address. And that concept, well, it's the concept of volatility. Remember I said all assets are different, they all behave, you know, bounce around in terms of price differently. Well, volatility measures that variation of the price of that financial instrument. It's, you know, measuring levels of uncertainty. And if we're using our charts technical analysis to come up with a volatility number, how do we do that? Well, we can use something called ATR, average true range, or we can use something called historical volatility, and we're going to focus in on the ATR approach. In technical analysis, ATR is a really useful tool, not just for this setting of the block sizes for Renko, for many applications, but basically it is a proxy measure of volatility. So we've said that adding in volatility and using a methodology like ATR is key to getting the right block size for a Renko chart, but you've also got to consider, when coming up with your strategy, some other key factors. Are you going long or short? What sort of moves do you wish to isolate? Remember I said about the different sizes of blocks. How sensitive do you want to get? What have past prices done? What drawdowns are you prepared to accept? But even with the ATR approach, it is quite hard to be consistent using Renko. So I've come up with my own methodology that I apply to all markets, which I want to run through now, and it factors in volatility crucially. And like I said, it's done me very well over many years, following this approach. So let's just have a quick look at that now. Well, how do I do it? It's a bit of a blend of the fixed and the ATR approach, but firstly I like to look at what the general markets that I'm trading are moving in terms of volatility in the ranges, whether anything is acting abnormally or outside of a standard range. And I use this as a ballpark guide to when I'm looking at setting my brick size for the Renko charts. But firstly, I'm going to need to know the individual volatility of the asset that I am going to be trading. So we've got to remember to make it as systematic approach as possible and as consistent as possible, and I'm going to use ATR as its fundamental starting point. So let's take a look at the actual method that I use. So for a daily time period Renko block size, this is what I do. So I go to the standard candle bar chart first and add the ATR indicator on. I leave it to 14 periods, and I want to obviously smooth that out, so I take the 50 period. I then read off the ATR number, but the really crucial point that I've highlighted here is that I then take 20 to 30% of this number to create the block size. This gives me the action I want, but not too much that it chops me out. And for what do I do for 1 hour, 50 minutes, different time periods, exactly the same process. I just change the candlestick bar chart to that time period and then take the 20 to 30% for the Renko block size. Exactly the same process, just different time frames. So here's some examples in the S&P 500. So on the left, our daily chart for the S&P 500. Now that thin red line at the bottom there, that's the ATR. And what's that telling us? Well, at the moment it's about 90, so that means every day the S&P at the moment you should expect it to move plus minus 90 points. Now I've smoothed that further with that blue line, just applying a 50 moving average, and that gives us a rough answer of 85 points for the S&P. So what does that mean for our Renko chart? Well, if we head over to the right, at the moment you can see at the top it's set to 7, and remember my rule, you take that ATR 85 number, take 20 to 30% of that, and if we are doing that, maybe 20 to 30 dollars might be the range for you. You can see it's set to 7 at the moment, so probably inappropriate. Now if we want a bit more action, a bit more signals in terms of Renko, then we'd change it to the 20. Remember, looking at that, I keep that the traditional, and this is TradingView only gives you ATR and traditional. Remember, we've already worked out the ATR. We don't take the standard ATR methodology here. We want to see what's going on in the price off the candlestick chart. So we got the ATR, we've got it set to 20. We put that in, we hit OK, and that gives us our setup for the S&P 500 on the daily chart. It's as simple as that. Again, adjust those numbers. You want to be more aggressive, more conservative, play around. And again, for the time frames as well, if you just drop the charts down to say you want to do the 4-hour chart and the 4-hour chart for the candlestick, again work out what the ATR moving average is and then apply those numbers into that time frame of the RENKO chart. So if you want to get more into the RENKO world, want to understand it fully, it's not just about setting the block size. It is one of the most crucial factors, but there's so much more to it. Where can you learn? Well, it's very hard to find information about RENKO charts all in one place. Well, I'm going to show you where you can do that right now. So where can you find all you need to know about RENKO charts? Well, it's right under your nose. All you have to do is stay on my YouTube channel. It is all there. Now, I've created a lot of different playlists around the world of trading, but one of them is called Learn Technical Analysis. Now, if you click on the view playlist and you'll scroll down, you find all the different types of technical analysis charts you want to learn from. And lo and behold, down there we've got one called Learn RENKO Charts for Trading. So once you click into the video course, what are you going to learn? Well, there's about 2.5 hours of free content, 6 sections, 45 lectures, all delivered by me, and I've been using these charts for over 2 decades in a professional capacity, and you'll see the content all laid out for you, where we go through absolutely everything from how they came to be to how you can use them with that Western approach that I talked about, how they can help your trading psychology, how you build and construct these types of charts, and that's a critical process to the success of them, how you can use other indicators, how you can build strategies, how you can get in and out of the trade, use all these other tools and create your own trading system all around it. So there you go. That's my course, Learn and Master How to Trade RENKO Charts. Get the trading edge, completely free on YouTube. Get stuck in. Enjoy RENKO. It is a fabulous chart type. And now here is the link to that very video.